Please
Sure,
join me, Michael.
Oh, wait.
Oh, we'll unveil the name? Okay. Come.
Okay, all right.
Please.
Oh, this is a true unveiling. As
Yeah,
a
it is a
physical,
true
literal
unveiling.
unveiling.
Yeah.
Okay, all right.
Please do the honors.
Okay, all right. Okay, so 1, 2, 3. There you go. Unveil. Excellent. Prism of possibilities. Very good. Very good. Oh,
Do I? Okay.
What's the one thing you got
Michael is the CEO of Mastercard and a member of its board of directors. He is leading the company into a more digital world where Mastercard powers economies and empowers people by harnessing innovation and the continued application of new technologies. For much of the past decade, first as chief product officer and then president, Michael was critical to setting the strategy that transformed the company's offerings from a consumer card-centric business to a platform that supports choice in how businesses, people, and governments make payments.
Let me formally welcome you, Michael. It's a genuine honor for the institution and for all of us here to actually have you here, and for you to unveil the leadership summit.
I think much unveiling lately. This is great.
But having a leader of your stature unveil that, I think, is a genuine privilege, and we are very happy about it.
Very good. Thank you. Thank you for having me.
Thank you, Michael.
Right. I see a lot of bright-eyed, bushy-tailed people here. This is great. And this is considering it's 7:30. That is even more interesting.
We're out of pressures right now.
My day worked the other way around.
We are also delighted to have Professor Krishnamurthy Subramanian with us today. He is a professor of finance at ISB. As the youngest chief economic advisor to the government of India from 2018 to 2021, Professor Subramanian instituted policy that led to India emerging from the once-in-a-century COVID crisis with strong macroeconomic fundamentals, unlike the previous crisis when India joined the fragile 5 economies. Acknowledging Professor Subramanian's contributions, the Honorable Prime Minister of India, Shri Narendra Modi, noted his academic brilliance, unique perspectives on economic and policy matters, and reformatory zeal.
Thank you. Thank you so much.
With that and the theme unveiling, we are very excited and hope to see everyone join us on September 24th for the ILS. Thank you so much for doing the honors, Professor Subbu and Michael. May I kindly request you to take your seat?
Well, the first thing I noticed, you have a sense of humor.
Despite being German.
Even better.
Right, exactly.
Over to you.
Thank you so much. Once again, a very, very good evening to everyone. It's so heartening to see such interest to hear Michael. I'm sure you're all very keen to hear his perspectives. We're going to chat briefly about the way the global economy is. And in particular, we would like to hear Michael's views on the financial inclusion, the financial sector focused on India, the kind of opportunities that there are. We were having a discussion just briefly before we came in here, and I think he seems to be very bullish. So about India in particular, Michael, if you would allow me, can I just request you to give you a broad sense of how the global economy is shaping up this year, and how do you foresee the economy going forward?
Right. So if you think about our business, a little bit like a seismograph. So we have a lot of feelers out around the world. We're active in more countries and territories than the UN actually has. So which is always, we're everywhere. But it's not to brag. It's just to tell you that as far as consumer personal expenditure is concerned, we really have the finger on the pulse. And what we're seeing is a little different than what the headlines tell. Recession is looming. I was doing a TV interview earlier today, and the journalist tried to make me say the R word. And I did not say it. I really did not say it. So consumer spending is healthy, and it has been keeping up in pretty much every part of the world, despite everything that you read. Why is that? How is it different from previous crises? Because we have a crisis. Now, there's some sort of economic uncertainty is definitely out there. What is different is we don't have a near about to burst asset bubble. We, on the other hand, have very high employment. In fact, nobody can get enough people right now.
Right.
And in between, there's another thing, a bit of a legacy of COVID is all these stimulus payments went out and they sit in consumer balance sheets, and people have received too much money because they can't actually spend it.
Right.
And they're now spending down these balances. So it keeps going, and it's bridging a little bit of the time to when the central banks woke up and started to take action to curb inflation. So for now, it looks like a bit of a softer lending path. There might be the R word, but if it happens, it happens, in my view, in a somewhat shallow and shorter form. The impact on our business will be 1 to 2 levels removed, because the spending that we see, which is CPE, which is not the full spending that you do, rents or your utility bills are generally not largely going through our rails. I think we will actually not see it at all.
Sure.
So I'm an optimist, but that is not a good story. So people want to write about more exciting stuff like the recession is looming. So yeah, I can't give you that tonight. Sorry.
I think that's very good news for many of our students. Given that,
and in India, frankly, inflation has gone down.
Correct.
So, that's just something to call out. First of all, I don't think here was crazy overspending. I think there was some responsible actions were taken during COVID. People did not get massive checks when they didn't need it. So I think all of that has come together in a positive way.
So one question that our students in particular maybe would want me to ask is, this year, which sectors do you think might be the ones where the labor market will be the most heated? That's what they care about the most.
Right. Where should you apply? You know what we see as a large employer? I see concentration of demand that cannot be satisfied with compensation that is going through the roof in anything engineering. So software, computer engineering. And then if you drill down into that, particularly around AI machine learning, and then further level down, anything cyber. Cyber risk, that is the hottest part of what is out there. One other area, it's in a somewhat a different path, is talent that is involved and knowledgeable and has experience around anything ESG. So back to the inclusion part that we talked about earlier. That is very hard to keep people, find people. It comes on the diversity side, it comes on the clients, on the climate side. Those are the 2 hottest aspects. There's many other,
Sure.
People look for good CFOs. There's lots of stuff going on, but those are the 2 hotspots.
So I want to move into discussing what you see as some of the opportunities, especially for companies like yours in India. I'm sure, you've seen the kind of revolution that has happened in payments,
Really?
on the digital economy. Well, I must say, actually, I'm not part of government, so I'm not speaking their word. But especially starting with what we in India call the Pradhan Mantri Jan Dhan Yojana. These are basically financial inclusion accounts. 450 million accounts of them. And interestingly, when COVID happened, that was one data that I was tracking very, very closely, because that was telling me the savings behavior, consumption behavior in the most vulnerable sections. And I think so one thing that I noticed there was about 250 to 300 million of those 450 million accounts actually have constant activity. Of course, within this 450 million, there is sort of the government puts in transfers, the entitlement payments, etc. But there are transactions happening, maybe 50 to 60%. Together with that, actually, the account aggregator, the e-rupee and the India stack. I think that's an aspect that we would love to hear your views on what it means in terms of opportunities in India, number one, but also what does it mean for the globe, because India is charting uncharted territory here.
I used exactly those words earlier. Right. No, it's very true. So as a company, we have been involved for over 12 years with financial inclusion. It was a problem that we faced actually in Africa. Very different context here in India. Just bear with me for a moment and I'll find my way back to India. There's an unnamed competitor that we shall not talk about that was active in Africa for 20 years, and we were really...
I must acknowledge that just at the start of about 2 minutes into the interview, I mentioned that name, and I felt like he's going to come at me now like this.
Anyway, let's not think about it. So the point is, we were late on a continent. We had basically ignored a continent. And coming up with a Me Too proposition and not trying to understand what the governments and the countries in Africa were trying to solve. What was their issue? It's not cross-border payment for rich Africans traveling to London. That was not their problem. That was already been solved by somebody else. So we asked them. And it was financial inclusion. That's actually not what they said. The answer that they gave is, we have the majority of our population not included. They're not online. They don't have a financial identity. They cannot transact. They don't have a data footprint. And frankly, we don't know where they are and what they do and all of that. And maybe in some of the cities through the telco activity, there was some nucleus of engaging the bottom of the pyramid population, but in rural areas, nothing. So if you can solve that, then you're in. Nigeria, largest economy on the continent, 210 million people, tiny compared to India, but in the context of Africa, behemoth. So we said that's what we need to solve. And the very clunky solutions at the beginning, prepaid cards. I mean, that's not really a tool that you use in a big way today.
When was this?
This is 2011.
Okay.
So we looked at this opportunity for us, but more so through the lens of what are they trying to do? What's the path to build a middle class? How long will this take? How do you create some consumerism? How do you create access to start with, but don't stop at access? If you have a prepaid account, and then what? Yes, you could use it online, but if you don't have any money, well, how does that help? How do you save? How do you take out insurance? All that. That was the journey we had crafted, and it was a similar conversation to the one that we had earlier, where not everything is clear, but you go in. I went to our board in a board meeting in London. I remember the boardroom, put out a business case, and the vice chair of the board was at the time the head of Goldman Sachs Asia, stood up and said, "It's the worst business case I've ever seen, and we should do this." Because it made so much sense. You solve a problem for these countries, therefore you have a right to exist and a right to play, and then you take it from there. And today, our market share in Nigeria across everything that we do is 55%, and was 0 at the time. So,
and how long did it take you to go from 0 to 50?
About 10 years.
About 10 years.
Yeah. So it is something that is commercially sustainable, and I think financial inclusion needs to be commercially sustainable.
Yes.
If you look at this as philanthropic activity, it's not going to go anywhere. The fact that India created the stack and solves a lot of the access issues through that, it's kind of pre-funded by the country.
Right.
But if you don't put commercially sustainable business on top of that, it's
Correct.
going to, in the end, not go anywhere.
That's true.
So leveraging the fintechs, leveraging the banks, and I think the banks actually have a bigger opportunity here than they actually use at this point in time,
Right.
to really build out solutions for every aspect, every part of society. I think this is where the opportunity lies. It will unlock huge growth, I think, for the country. You've solved the entry criteria, I think, in unprecedented ways at scales that nobody else has done. I mean, it looks like super tiny, like a hobby, what we did back then. And I think here it's done in a way that we now, as a company, look at India and say, uncharted territory, solutions at massive scale. We expect other countries will look at India and say, India has solved this. Like I'm some country in South Asia or in Africa and said, I want the same thing. I want the stack. I want a copy of it. Can I use it? For us, that also means back to this same issue in Africa. We didn't need to solve cross-border for rich Africans. We needed to solve a problem that's not been solved. So if payments at the basic level have been solved here, then we as a company need to do other things, move up and say, how do you keep this ecosystem safe? Trust, cyber risk, all that. That's where we should play. Data analytics. What do you do making that data available that these people now have because they're not transacting in cash to get a bank loan? Have a tiny shop somewhere and then use that data to get some access to finance and keep growing their business, which will then employ people and so forth and so forth. And I think that's the opportunity. I think it's a long-term, very good economic policy. Vis-a-vis, let's just get access or do something good.
Right.
So that's, I think it's massive. And so, India will be a model. I'm 100% convinced.
Hopefully that is, your words come out true. I want to, pick your brains on a unique aspect, and having done research in the Indian banking sector and financial sector for a couple of decades now, India faces a unique problem.
You must have started very young.
Well, don't get misled by the looks. So the problem is the following. On the one hand, if you look at the credit to GDP ratio today, we are at about 58% of GDP. And if you just look at comparative statistics, the world and the OECD 6 decades back was at the same proportion. In other words, in 1960, the OECD and the and the world at overall was at 60% of private credit to GDP. If I take a simple sort of a specific example, and this is an example I love using, we just celebrated 75 years of our independence. South Korea also had its independence on the same date. They also are 75-year-old. And a statistic which actually bothers me is if you just plot the private credit to GDP ratio for South Korea and India, starting from 1960 to 2020, in 1960, they're behind us. And then if you plot that, India looks like a 5-degree line, and South Korea looks like a 30-degree line. Today, they're actually close to 200%, private credit to GDP. And I can give you more examples like that. Malaysia and Australia, it has also translated into increase in, per capita GDP, and something that I guess, this audience doesn't need to be explained about. But that's one. So on the one hand, we actually have large sections of people who have never gotten credit.
Right.
Have basically even today are credit rationed. So that's one aspect.
Right.
The other aspect, which is something that we went through over the last decade, is that we have really dubious lending to corporates. Dubious lending. I actually am choosing those words very carefully. If you start from around 2008-9, after the global financial crisis, 2013. So we had a huge banking sector crisis, and just a couple of years before COVID, where trillions of rupees actually were lent to and before my PhD, I worked in a bank where corporates that have already defaulted on a loan are given loans again, are serial defaulters. So you have on the one hand actually retail credit, huge amount of credit rationing, and on the other side what we call willful defaulters, and the banking system continues.
Right.
So this is where I think love to hear your perspective, that data, how do you, is there a possibility that we could sort of kill two birds with one stone here, and that one stone being data? On the one hand, enhancing credit to large sections of our population and thereby equitable growth. On the other hand, also, this kind of sort of taxpayer and depositor money, that eventually citizens' money being lost. How do we control, and the role of data, in
Right,
that?
right. So I think,
sorry, a mouthful. I think a big question.
yeah. No, but I think a very important question. I think data is an unlock. It's one of the biggest unlocks that's out there. I think there is, so as you might hear a trace of an accent, so I'm from Europe. And why am I bringing that in? Because there's different ways to look at it. You can look at it as an unlock. You could look at it as something that is a precious kind of asset that we all individually have. I mean, we all have data, and we should use it, and it should be our own thing, and you should safeguard it, and you should protect it, and all that. And then you can see on the other end of the spectrum, data can be the fuel to like the coolest innovations.
Right.
So there's this whole spectrum of different ways of looking at data. And I think this trade-off between privacy and innovation is a very tricky one. So who owns this data? Who does something with it? And the data protection officer is one of the most loved things in the German context. So we have more data protection officers than I think any other place around the world. And it's been in the way of innovation. So I think here, the mindset that I can see in India, and I've seen it in some of the government conversations. You're not in government. I met a lot of government on Tuesday. Is that we want to use data actively. We want to be thoughtful about it, but we want to use it. It shall not be ever in the way of innovation. But we recognize that strong consent is needed, so your data can only be used by you. So that's great. So I think the starting point is there. We just talked about financial inclusion and how you can really unlock the potential of probably 700 million people.
Right.
So that's fantastic, and I don't think we need to belabor that point. The point about what else as you move up into different segments, other segments of the economy, I think there's a lot to do. And there's a lot of opportunity there. So medium-sized business, what kind of loan you get, addressing defaults, having more visibility, all of that is entirely possible. Being more predictive and not offering loans to people who don't need money, but people actually who need money and when they need it. Propensity models, throwing AI in and getting access to data in real time so that you can do relationship-based lending, but you can do flow lending in a moment, in real time, to judge this is when this person needs this loan because they want to buy XYZ for their business or just personally for whatever they want to do.
Right.
So the open banking infrastructure that is driven here in the country, which could be another element of the India stack, I think that's thoughtful. That's a good thing to address that and make that data available. I think there's an interesting loop back to innovation though. If you make So there will be very many different views to what I'm about to say now. Is if all data becomes a public good for everybody, then I think you will pull out an incentive for innovation. One has to be thoughtful about it. It's like going to the pharmaceutical industry and saying this: the moment you found a cancer drug, I'm going to take your IP away and I'm going to heal the world. Well, the incentive to do research, therefore, fundamental R&D will be reduced.
Correct.
So I think it's a huge driver. I think the thinking around a platform and making data available, that's all there. I don't see enough pull yet on really use case driven. So how do we do this for? Who does it?
Right.
Do they have the private sector banks? Do they have a real motivation to get into that? I'm finding there is a lot of focus in this is not India specific, a lot of focus in private sector banks and compliance, right?
Right.
Getting into that,
Mhm.
there's not enough clarity from a regulatory perspective on what can you do with data, what is permissible, what is not, because data privacy laws are not keeping up. Technology is ahead of regulation, and that creates a back and some uncertainty. And particularly a highly regulated industry like banks are careful about that. Fintechs are racing ahead, but people don't necessarily always trust them with their data. So it's kind of a little bit of a soup that needs to be stirred, and then you got to see kind of like the alphabets in the soup, because that is form a word data, and we can find a way forward. I'm not sure that was a great analogy, but anyway. So,
I want to be conscious of time. Last question.
Right.
I've been so far very kind with you. So let me provoke you now.
Bring it on.
You mentioned about privacy, and so there is a view, and remember, I'm provoking you here.
Right. Good.
So
let's see if I take the bait.
So there's this view that if I basically, people who are in this room, and especially in in an Indian context, all of us certainly can claim to be part of the 0.1% or 1% of this country in terms of income, etc. So we're certainly the elite. If I, in contrast, let's say the maid that comes to work for us, at home. That's a great part of being in India.
Right.
So if I ask that maid saying, in fact, her son was a couple of days came and asked me he wants a loan. Now if I basically say that in return for you to get this loan, you have to make all your data available. Now the question, therefore, I want to ask you is, this preference about privacy of data, is that an imposition of the elite's preferences on that of the of the poor, in the following context, that in the the trade-off for the poor person, getting, let's say, that few hundred, maybe $100,000 or $10,000 to set up a business, may be far more important than basically parting with the data. But for me, even if I'm maybe given $100,000 loan, maybe I will not part with the data. Now, so in this debate on privacy, are we sort of trying to be too paternalistic, the elites in particular, in trying to impose our preferences, on the poor, and thereby possibly depriving opportunities, to them for going ahead in life? And that's the question, that I wanted to ask you on.
This is, I actually don't think so. I think those parts of the world where I see that there is a paternalistic kind of state approach, it's really because misuse is feared. That's certain. The motivation in Europe is pretty pure. It's not practical, unfortunately.
Right.
But it's pure. So they really want privacy, but they're not figuring out that that is actually depriving people of opportunity. So that the reverse logic of what you just said is definitely true. I think there's a very simple answer to your question, and that is everything just should simply be driven by very strong consent. So if I say I'm willing to give my data, I just get a really cool UX, and I'm willing to just give all the data, because then I have always all my preferences for all my loyalty programs, whatever, my purchasing preferences available at my fingertip. I got to provide the data.
Correct.
I love that.
In fact,
no problem at all.
In fact, the account aggregator.
But the Europeans come along and say, well, that actually could be a problem, and because they go a few levels down and say, well, who then has that data, and how is that safeguarded, and do we understand the value chain of data? And that's where eventually there's some kind of back room fintech where that breaks down. I think it's a valid concern.
Sure.
But I think, just for the sake of privacy, that's a bad idea. We actually think as a company data privacy and how we deal with strong consent and how it's really built into our solutions by design. Privacy by design is a massive differentiator because we can solve this issue. It does not have to be a trade-off.
Right. Okay. In fact, the account aggregator has that feature where the customer basically says, I give you my data in return for you to assess me as a credit, and then so I want to open the floor now for questions.
So the really provoking question.
That's
Your
I didn't do a good job, so why don't I take, turn the please stand up. If I would request you, mention your name, and then please keep ask a question. What I don't want is any comments or general motherhood and apple pie statements.
right.
Hi, Michael. My name's Pujit.
Pujit.
I have a question for you, which is, tech innovations are kind of known to disrupt industries. You know how, for example, Netflix caused the end of Blockbuster, let's say.
Right.
And I'm sure even the credit card market and Mastercard would face such threats. And what is it? Yeah, I mean, I guess I don't know. But what, if anything, is Mastercard doing to navigate such threats?
So, if you are a technology company, particularly a large one like ours, I would say we're like the OG fintech. Been around like quite. So, tells you something. We're still around, huh? And if you look at our multiple, we're doing okay. No, but in all seriousness, you have to disrupt yourself. You just have to continue to do that.
Right.
But if you have a very large, successful business and it works, that's actually your biggest problem because it works so beautifully. So what do? You need to do this gradually over time. About 10 years ago, bit of feedback here.
Yeah, it's fine.
It's okay?
Yeah, it's
All right.
okay.
About 10 years ago, we were sitting in a room challenging each other and looking at where the economics are going. It's pretty clear that anything that is relatively low value add will see compressed economics over time and more people will come in. You just extrapolate that. It was clear that basic payments will experience that. We were very clear at the time that's not what we want to tell our employees, but that's something that we see and we need to gradually prepare for that. So we went on a diversification strategy. And today, a third of our revenue has nothing to do with payments. It's services, it's data-related services, it's cyber risk services. A third for a company our size is really a lot. Then you go ahead and you keep doing exactly that. But how do you look further out? What is around the corner? You hire a bunch of really paranoid people. So I have people in my team that are really paranoid to bordering on irritating. And that's good.
Well, you guys watch out.
But I think asking the right questions, having an environment where you can ask those questions, challenge all that. We do this oftentimes a blue team and a red team and stuff like that. But that's still all internal. I think where it gets really interesting is we as a network, we deal with all sorts of people from in different parts of the world, with governments, with fintechs. What I find particularly illuminating is follow smart money. Where is smart money investing? We invest in an inordinate amount of time in PE, in venture capital, understanding, building those relationships. The number of dinners I have with people from that world just to hear, like, what are you looking at? What's going on? Very valuable, and our team does that as well. So that's kind of what we do. Disrupt ourselves, have the radar up, hire paranoid people. Right.
That would be a plug, for us as well. We have enough paranoid people here. There you go. So you should be coming to recruit, more paranoid ones. Yeah, go ahead.
Hi, Michael. Thank you for being here. My name is Milind. I'm a PGP student here. So my question is that
PGP is the postgraduate program.
Okay.
Management. Go ahead. Okay.
So my question is that in the recent years, we have seen like events of decades worth of decades playing out. Like we had COVID and geopolitics being played out in Asia Pacific, Europe. And then now we also have extreme weather events having widespread economic effects now. in the recent years. So how do you see all these events playing out and leading to changes in consumer behavior in the coming decades?
Right.
You get to see we train our students well.
Yeah. You know, there is, I think humans are creatures of habit. I'm finding.
Good point.
So we've seen dramatically quick change in behavior second quarter of 2020 because it was necessity. So you just need to be at home and you do things differently. The structural changes in the digital economy were massive out of that. So we looked at this and said, how long is this going to last? You build new habits, but the muscle memory of the old habits, that's really the winner here.
Correct.
So it's going to come back. These companies that were out there and saying online is the future only. There were some business models, you can just watch their stock price. It went through the roof. Well, back down at first floor right now. So the structural changes weren't actually that dramatic. It's a blip and it's coming back down, but we will see a glide path of more secular shift into digital over time. What's happening here in India with pulling hundreds of millions of people in the digital economy, that's going to be a different kind of growth rate. Although there's some last mile issues to solve. We were having a conversation earlier on some of the challenges that still, you got UPI everywhere, there's a few things still to do. Geopolitical tensions, I don't really see significant impact on consumer behavior. People will continue to live their lives. In Europe, I mean, like where I have a house back home in Germany, this is so close to Ukraine that back when Chernobyl blew up, people were I was running around in rubber boots. That's how close it is. So people do that. They just live their lives.
Right.
Because you cannot possibly think about it, even though it's so close. There isn't that much behavior. Climate, you would think that's the question of the century for all of us to solve. Is that actually changing the consumption industry and the consumption behaviors in any significant way right now? It's not. It's actually very scary. So we as a company, because we sit at the center of the consumption industry, we see all of that. We invest an inordinate amount of effort and time to educate people. So we've done something that is a theory that is playing out in Europe right now. So the Europeans have said COVID, recovery from COVID, and a move to renewable energies and generally a more climate-oriented economy would be a good thing. We can bring both of that together, called the European Green Deal. There's only one non-European company that's part of the European Green Deal, which is us. And this was a conversation with Frans Timmermans, who's the commissioner that is responsible for the Green Deal. He said, so we called him up and said, what would you think if you don't only address the supply side, but you address the consumption side as well? 450 million Europeans behave in a different way. He said, I love the idea. How do we do it? I said, well, how about we start by informing people? What is the consequence of their purchasing decision? So let's say I buy this particular good and it has 2 tons of greenhouse gas emission as a consequence of that. And then be clear that that is what you're doing. We thought this could be a really big own goal from a business perspective because our customers are the people who produce this stuff. Very interesting. The reaction was very different. The idea of informing customers and starting to create a glide path of changing behaviors. Airlines wanted to be part of this program. They're coming on board. Manufacturers, retailers. Today, in this particular thing, it's called the carbon calculator. They have a whole range of companies and banks that want to do that. So there will be change over time. The habits are changing over time. This is, and I think as a private sector, we have a massive role to play to nudge that forward. I think if you push too hard for a sense of urgency, it's not going to work that well. But I think pushing it along, that is, if more private sector companies come together to do that, I think it's going to help.
I think we can have one last question. I've taken 2 questions from this side, so I'll have to take one. I'll have to give the opportunity to students.
How about a lady?
Yeah, absolutely.
Like, what is
I think, question from one
All
of
right,
the
over there.
ladies.
Now we go back to that.
There we go back to that side, actually. So, the heavyweights are here.
Right. We'll come back over there.
Hello, Michael. Hi,
Hello.
Subbu sir. I'm Sushma. I'm trying to understand one thing. What's the competitive advantage Mastercard has over its competitors, especially in India?
Right. So first, I think it's very important to define what the competitive landscape actually is in which we operate. That unnamed company earlier is not our competitive landscape. Okay? So it starts off with actually our biggest competitor is cash. So it's like this. It's not a motherhood and apple pie statement.
Yeah,
It's actually that trend towards digital. Displacing cash is the biggest growth opportunity, and cash does not have a lot of competitive advantage compared to what we do. Safety, security, velocity, printing a data footprint, as we have talked about, credit access, cash does none of that.
Interesting.
And by the way, somebody can steal it. So you cannot steal. Our stuff is secure.
Apologies, I'll just interject because, what you said, cash is your competitor. Before I moved to the ISB, I was at the Gozeta Business School in Emory University, Roberto Gozeta. He
Right.
said basically the competitor to Coca-Cola is water.
Right. There you go.
So please
right,
go ahead.
right. So that is the biggest competitor. Then the lens through we look, we have traditional payment players, and there's a few established names, one we did not mention, and others as well. So, that is interesting for us, and we do look at that quite intently. But then it is a much broader competitive landscape. In many ways, part of what India is doing with its payment platforms is also a competitive angle. The gyro system in Europe, you have a lot of homegrown payment systems. But over time, we have changed our view on that and say that is partly head-on we will compete. But in many times we will actually partner because we have a lot of value-add services that they all need and want because it makes a better experience for their customers. So there's kind of friend or foe, it's unclear. So we do both. The paranoid people look one way and the others look another way. So there's partnerships. But then I mentioned earlier, we do have a whole set of payment service, data analytics, cyber. So that competitive landscape is an entirely different one. You can look at it as an SAP. You can look at other data and SaaS businesses. They are an entirely different kind of competitive landscape. B2B payments, there's a lot of specialist companies that do nothing else but B2B, enhancing B2B data and so forth. So it's that wide. And that's actually very good because if we were if we were running a bread and butter payments business, it would be a handful. And it would not be a very good playing field to play on because it's very hard to differentiate. We go up and up and up the value add services ladder to differentiate. And why we are the better services company than the pure plays is because we always have the lag in payments. We have that data, that transaction data, that experience that allows our AI and our machine learning to be better than a pure play that says, I just have really clever engineers and really good AI. Give me your data. We can see the world through our data and make that better. So I feel pretty good about our competitive landscape, but the paranoid people will not agree with me. And that's good. That is very good.
So
even our own board. Our own board is oftentimes looking back at that one company and saying, no, that's not it. That's not where we play. That's not where we want to stay. That's not where we're going.
So I have the choice between taking one more question versus maybe asking you to indulge yourself in giving out some career advice to all of them.
Let's take the question.
Let's take So there I did manage to put you on the spot. Let's have a question from the person at the back wearing a red shirt.
Thank you, Prof. Hi, Michael. Thanks a lot for coming here. I really liked your
What's your
views
name?
about. My name is Aaron.
Yeah.
So I really liked your views about data privacy that you spoke
Right.
about. But one of the things that you also spoke about regulations. So, regulations in Europe and regulations in India are very different with respect to data. So some companies try to turn a blind eye towards it, and not deal with data according to the regulations in Europe. So I wanted to ask, how does Mastercard and how do you as a CEO implement strategy to ensure that data is protected in India as well as it is in Europe?
Right. You know, we have a very simple approach to it, basically common sense driven, and I come back to this principle of consent. So our data principles that guide what we do are as follows. It's your data, you control it, you benefit from it, we safeguard it. That's it. If you dissect hundreds of pages of GDPR, European Data Privacy Regulation, that's what it comes down to. We just made it a little simpler. We're not bureaucrats, so we wrote it up in a different way. We have just done a second edition of that. We went out with that maybe 2 years ago. We just updated that. We refined it a bit, and there's a few sub bullets now on how that is. But that is as simple as what we do. That allows you, based on consent, to do stuff with data. But you want to, it's not a 17-page addendum on a do you accept button on some sort of app. It's very simple, very clear. You will always know what you're up with when you use our solutions. And we mandate to anybody who has a Mastercard license to do the same. So you cannot accept or issue Mastercard payments if you don't follow that logic. So we advocate, we invite other people to come onto these principles in our ecosystem and say, whether the ones who have our license, that's not an invitation, it's kind of a must, but other people, we talk to banks, we talk to governments, isn't that very straightforward? So that works. I think it's fit for purpose. We have had no need to change. We just refined it a bit and made it a little bit deeper. And that is what Privacy by Designs, our product people, they design our products like that. There's one right here in the front row. It works. I think keeping it straightforward, common sense.
So I see a lot of interest on many questions, more questions. I think that's testimony to how engaging you have been. But I'm sure you have a business to run.
Well, you are the last stop between me and New York, so I'm going back.
And therefore,
to the airport.
We will have to let you go. But I think, from my side and on behalf of the institution, want to express our sincere gratitude for actually, taking time in your India trip to actually come here and visit us and sharing your wonderful perspectives. I'm sure our students here have, are enriched. They will certainly not forget ISB, but they won't forget Michael either.
Excellent. And Mastercard. Thank you. Thank you. Thank you. That was fun. Thank you. Thank you. Good stuff. All right. Thank you.
Yeah.
I wish you all the best with your studies, and the application forms are at the door.
Is there something else on the agenda? Sure. Go ahead.
Okay. All right.
Yeah, that's part of the formal.
Okay. Good. Let me sit back down.
So I think you should do against the sitting part, right?
On behalf of the ISB Leadership Summit team, I would like to thank our phenomenal speakers for such an enriching session. We surely have a lot of things to take back from today's session. I would also like to take this opportunity to thank our dignitaries from Mastercard for joining us today, as well as our fellow classmates, and most importantly, Ravi Datla, our alum from ISB, for being very instrumental in making this event happen.
Sorry, Michael, that's reserved for the alums, the special affection.
All right. Great.
I would now request the audience to rise and we'll take a group photograph.
Okay. All right. How do we do this? From the
Well,
other way around?
we have a very, very capable photographer, I think.
Okay. All right. We just stand in the middle?
Yeah, I think
Okay,
we
all right.
can.
Okay. Good. It's fun. Okay. All right.
Great.
Excellent. Thank you.